Shall we start then? Yes. Okay, well, good morning to everybody. I'd like to welcome you all to this special panel discussion on the occasion of the launch of the 10th anniversary edition of Financing SMEs and Entrepreneurs, an OECD Scoreboard. Our discussion today is around the theme, Back on Track, is SME debt holding back the recovery? My name is Miriam Corrine. I'm the Senior Counselor on SMEs at the OECD Center for Entrepreneurship, SMEs, Regions, and Cities. And I'd like to start by welcoming our special video message from the OECD Secretary General, Matthias Cormann. We will load the video now.
Dear colleagues, it's my absolute pleasure to launch the 2022 edition of the OECD Scoreboard on financing SMEs and entrepreneurs, and to open today's high-level panel discussion. Since its creation 10 years ago, this flagship annual report has become the international reference point for understanding trends and policies on access to finance for small and medium-sized enterprises across 48 countries around the world. We are continuing our efforts to strengthen and expand this important work. SMEs were hit particularly hard by the COVID-19 pandemic. The livelihoods of many depended on their survival. 3/4 of the jobs in the sectors most affected by the pandemic were in SMEs. Governments stepped in with vital and unprecedented measures to keep credit flowing to SMEs. In most OECD countries, between 20 and 40% of SMEs received some form of government support in 2020. Our scoreboard shows that government-provided loan guarantees more than doubled in 2020, and direct lending to SMEs was up by 17% on the previous year. The total stock of loans to SMEs grew by 4.9% in 2020, the largest increase in the scoreboard's history. Emergency support measures, including monetary policy interventions by central banks, also pushed effective interest rates down to record lows. The median SME interest rate of scoreboard countries fell by 0.4 percentage points in 2020, the largest reduction since 2009. This support helped avoid a wave of bankruptcies and was a remarkable achievement. However, it has also left many SMEs with higher levels of debt that will need to be tackled going forward. Additionally, the war in Ukraine and the resulting humanitarian and economic crisis adds uncertainty to the global economic outlook as it emerges from COVID-19. It is affecting financial and energy markets, trade and supply chains, and driving inflation up, especially in energy prices and downstream sectors, all of which have important implications for SME operations and performance. The OECD estimates global economic growth could be at least more than 1 percentage point lower this year than was projected before the conflict. Inflation, which was already elevated at the beginning of this year, could be higher than it would have been if war had not broken out by at least a further 2.5% on aggregate across countries. These developments reinforce the importance of support and access to financing for SMEs and entrepreneurs. Equity and quasi-equity instruments need to be mobilized for SMEs, particularly those whose business models generate and rely on innovative intellectual property. Asset-based finance, such as leasing and factoring, which experienced a significant decline in activity during the pandemic, can also help businesses diversify their financing and improve resilience. The 2022 update of the G20 OECD high-level principles on SME financing will also provide guidance to governments on achieving these objectives. SMEs will be key to deliver the jobs growth needed to boost the recovery, and their engagement is also essential to help address the major challenges of our time, including the transition to net zero emissions by 2050. Our report, No Net Zero Without SMEs, shows that SMEs contribute between 50 and 70% of greenhouse gas emissions by the business sector. which is why we have created the new OECD platform on financing SMEs for sustainability, to work hand in hand with public and private financial institutions to ensure SMEs have access to finance to make climate investments. But SMEs have received relatively less attention in national recovery packages than during the crisis. Our scoreboard shows that only around 2% of total funding in recovery packages targets SMEs, compared to more than 25% in crisis rescue packages. And SME policies represent only 2.44% of the financial support for climate and sustainability contained in these packages. In these volatile times, we must continue to place SMEs at the center of our efforts to build stronger, fairer and cleaner economies. You can count on the OECD's continued support. I look forward to hearing your views on how we can deliver better policies for better SMEs and entrepreneurs. Thank you.
Well, thank you. I'm sure you'll all join me in thanking our Secretary General for that message. It's now my pleasure to introduce our Director for the Center for Entrepreneurship, SMEs, Regions and Cities, Lamia Kamal-Shawi, who will present some of the key findings of the 2022 report in more detail. Lamia, welcome.
Thank you so much, Miriam. Good morning, good evening, good afternoon, everybody. It's my great pleasure to present the latest findings from the 2022 edition of this OECD SMEs and Entrepreneurship Financing Scoreboard. I'm going to make a PowerPoint presentation, and I will ask now Heather to share the screen. Thank you so much, Heather. Maybe show the plain slide, the view you may need. Yes, thank you so much. So, of course, as a result of the pandemic and now the war in Ukraine, it has been, we can say it has been a turbulent 2 years for SMEs. So this report really looks at the impacts on their access to finance. Next slide, please. Thank you. So today I will give you a brief overview of the scoreboard, how SME finance weather the COVID-19 crisis, our assessment of recovery packages, and the key lessons for policy makers. Next slide, please. So this is the 10th in the series of the scoreboard, which was first published in 2012. And the objective of the scoreboard is really to provide a single point of reference for data on financing conditions and policies to improve SME access to finance. It draws on official data from ministries, central banks, statistical offices, and finance organizations covering 48 countries, including OECD members, and a range of emerging market economies. And as our Secretary General just mentioned, we are working very hard to improve the scoreboard by including additional middle-income economies, as well as by covering other types of financing instruments, such as, for instance, equity financing and online alternative finance. And we are also working to collect more granular data, including by subnational region and by gender of the principal owner. Next slide, please. So how did the SME finance weather the COVID-19 crisis? Next slide. So trading conditions have been tough. They have been tough from the start. GDP contracted by 3.5%, and global trade declined by 8.5% in 2020. And now a new global supply shock linked to the war in Ukraine is again bringing challenges for small and medium-sized enterprises. The OECD just released a report on the economic and social impact and policy implications of the war in Ukraine. And this report shows that the war is likely to knock 1 percentage point off GDP growth in the OECD this year. And inflation is likely to increase by 2.5 percentage points this year, though with large differences between countries. These trends will heap additional pressure on SMEs, many of whom remain fragile coming out of the pandemic. Next slide, please. So why it is so? Because during the pandemic, SMEs were disproportionately represented in sectors that were most affected by containment measures. They had smaller inventories, supplier networks, and cash buffers. And of course, they had more difficulty in accessing finance than larger firms, making them more vulnerable to disruptions. And indeed, at the height of the crisis, over 50% of SMEs globally were at risk of being wiped out in less than 3 months. So governments stepped in. They did so with unprecedented measures to save their SMEs. Lower interest rates, quantitative easing, and direct intervention through government guarantees, debt moratoria, and debt restructuring schemes, as well as grants. All these measures made the big difference. And our scoreboards show this pushed lending to SMEs to a record height. The median of outstanding stock of loans for 39 countries reporting on this indicator increased at a rate never seen before in the history of the scoreboard. And the graph on the screen shows an increase of 4.9% in 2020 compared to an average annual increase of 1.2% in the previous year. So we saw a stronger increase in upper middle income countries where the stock of SMEs loans actually soared by 13%, and in high economy where they rose by 6%. Next slide, please. But of course, this is the big picture. This is the big picture of outstanding SMEs loans on the books, because as the graph shows here, actually there is a wide variation across countries covered by the scoreboard. New lending to SMEs actually fell in half of the scoreboard countries. In some high-income countries where this happens, non-repayable support such as grants may have reduced the demand for new loans, while in middle-income countries, public support may not have been sufficient to replace the decrease of private lending. Next slide, please. Overall, credit conditions remain favorable for SMEs during the pandemic, and look at the graph. Actually, you can see effective interest rate for SME declined in 34 out of 42 economies, and in the remaining countries, they increased only marginally by less than 1%. In fact, the median SME interest rate for the scoreboard countries declined by 0.4 percentage points in 2020, which is the largest drop recorded in the scoreboard since 2009. Next slide, please. So looking at the type of measures deployed by government, we see a huge reliance on credit guarantees. In fact, they more than double across all group of countries between 2019 and 2020, as shown by the graph. Next slide, please. So thanks to this support, as well as freezes on bankruptcy proceedings, we saw an unprecedented decline in bankruptcy rates, as shown here. However, as public measures are phased out, we can expect bankruptcy rates, non-performing loans, and payment delays to increase going forward. We need absolutely to improve insolvency and bankruptcy procedures to deal with this and promote debt restructuring to support otherwise viable businesses. Next slide, please. So there are also indications that other type of finance, and in particular alternative debt, such asset-based finance, suffered during the crisis. Next slide. So indeed, let me see if we have, yes, we have the next slide. 21 out of 27 countries so falls in leasing activities, the highest number of scoreboard countries registering a decline since 2009. And this reflects weaker demand for new leasing services, as well as lower payment capacity on leases. Factoring also declined in 2020, in part reflecting the sharp reduction in trade, with the scoreboard median falling by more than 16%, accelerating its downward trend in recent years. So going forward, we need absolutely to ensure that we avoid backsliding on the broader progress made in diversifying SME financing instrument before the pandemic. And sorry for the pronunciation. French pronunciation is so different from English when we use this word. Next slide, please. Okay, so now turning to equity finance, venture capital has remained resilient. Half of the countries registered growth in venture capital in 2020, in particular those with an already large market share. And in Europe, VC financing increased by 15%, in the United States by 13% in 2020, and evidence suggests this trend continue in 2021. However, there is a however, the scoreboard showed that the crisis took a heavier toll on seed and early stage funding than on investment in later stage funding. And this is really bad news for innovative startups, which often rely on this type of funding. Next slide, please. So let us now turn to prospect for the recovery. In the report, we assess a national recovery plans for 91 countries in a special chapter at the end. Next slide, please. And our first finding is that the focus on SMEs seems to be fading. As shown in this chart on the screen, only around 2% of total funding in recovery packages targets SMEs, compared to more than 25% in crisis rescue packages. 2%, more than 25%. And we see limited use of grants, but also of alternative finance instruments. Instead, national recovery plans have now a much broader focus on innovation, digitalization, skills, and sustainability. And if we look at the next slide, Heather, we can see that the share of SME-related policy in greening, innovation, digitalization, and skills have reduced significantly. In greening, for instance, they now represent less than 2.5% of financial support in recovery packages, compared to 8% in rescue packages. Next slide. So against this context, what should we do? Looking ahead, it will be really crucial to find ways to encourage SMEs to invest in growth and greening without adding to the already heavy burden of debt many already face. Next slide. To do this, governments will need to continue to monitor and address the sustainability of SME debt. They will need to support and encourage alternative financial instruments, such as subordinated or convertible loans or other type of hybrid instrument, as well as equity and quasi-equity schemes for SMEs. They will need also to continue to support SMEs in their transition to net zero, especially as SMEs contribute 60 to 70% of industrial emissions. And at the OECD, we are now working to update the G20 OECD high-level principle on SME financing. This is going to be released in autumn. And we hope that this new legal instrument will guide government in achieving all this objective. Next slides, please. So meanwhile, of course, we are playing our part to help greening SMEs. This is really a major now focus of the program of work in our committee. And we have recently launched the OECD platform on financing SME for sustainability together with development banks from United Kingdom, from Canada, and from Korea. This platform aims to support governments and public and private financial institutions to share a knowledge and best practice in financing SMEs for the green transition. And here I would like to invite all countries present here to try to get involved in this very, very important initiative. Next slide. So this is the end of the presentation. Dear friends, dear colleagues, dear all, in this challenging time, we really must continue to build a recovery with SMEs at its heart. You can count, of course, on the OECD to continue to work to do so, alongside governments, alongside banks, alongside SMEs themselves. And I'm very much looking forward to hearing the view of our panelists on this very important issue. Thank you very much.
Thank you so much, Lamia, for that presentation. I think we have a lot to digest. One thing I noted that things were not business as usual over the past years. We heard a lot of unprecedented and record information in your presentation. And I think it's an excellent way to set the scene for the panel discussion that we're going to begin now. So now I'd like to first start by welcoming all of our panelists and thanking them for being here with us today. I would like to introduce everybody. So first, I'd like to welcome Martin Godel, who is the head of SME policy at the State Secretariat for Economic Affairs in Switzerland. Among his responsibilities, he looks after matters related to SME financing and reducing the regulatory costs for SMEs, including digital government for SMEs. And of course, I must say also that Martin is the chair of our OECD Committee on SMEs and Entrepreneurship. So welcome to Martin. Then I'd like to also welcome Catherine Lewis-Torre, CEO of the British Business Bank, which is the UK's government-owned business development bank. Established in 2014, the British Business Bank seeks to level the playing field for finance among SMEs by increasing supply and diversification of the financing market. It aims to drive sustainable growth and enable the transition to a net zero economy. Catherine previously held the position of CEO of the bank's two commercial subsidiaries, British Patient Capital and British Business Investments. Catherine, thank you so much for being with us today and welcome to you. I would like to introduce Helmut Kramer-Eis, who is the head of the European Investment Fund's Research and Market Analysis and the chief economist of the EIF. The EIF is part of the EIB group, providing risk finance for European SMEs. By developing and offering targeted financial products to its intermediaries, the EIF enhances SMEs' access to finance and fosters European Union objectives in the fields of entrepreneurship, growth, innovation, R&D, employment, and others. Welcome, Helmut. Then I would like to welcome also Gerhard Humer, the Economic Policy Director of SME United. SME United is the association of crafts and SMEs in Europe with around 70 member organizations from over 30 European countries. SME United acts to create an SME-friendly climate in the European Union. It builds capacity with its member organizations and entrepreneurs across Europe so that SMEs can benefit from the opportunities offered by the European Union. Gerhard brings very long experience in many of the areas of importance to SMEs. Previously, he held a senior position at the Austrian Federal Economic Chamber. So welcome to you, Gerhard. Matthew Gamser, the CEO of the SME Finance Forum, last but not least. The SME Finance Forum is a G20 country-created global platform for knowledge exchange, good practice promotion, and networking on SME finance. The SME Finance Forum is hosted by the International Finance Corporation, which is the private sector arm of the World Bank Group. The forum members and industry partners include over 200 banks, fintech companies, development banks, and other SME financiers, and operating in over 190 countries. And Matt brings a very long experience in private enterprise and financial sector development, And I should add that we're particularly happy to have Matt here with us on the 10th anniversary, as he also joined us for the launch of the very first scoreboard back in 2012. So welcome and thank you to all of our panelists. We heard quite a bit during the presentation of the new scoreboard about SME recourse to lending during the pandemic and how this lending was backed by government support. Now, as we move to the recovery phase, we all know that it's been a very rocky path. We'd like to try and understand what position SMEs are in today to address the challenges they face. Has borrowing left them with a heavy debt burden that will impede their ability to make investments in innovation, skills, and digitalization? Or is the pandemic already fully behind them? The first part of our panel is going to seek to answer some of these questions and discuss the role of different financing instruments in meeting SMEs' various financing needs. The second part of our discussion will focus on one of the key challenges ahead, which is the transition to a more sustainable economy. After the 2 rounds of discussion, we hope to have time to open the floor for questions. And I'd like to invite you also to feel free to send in your comments and questions during the session, during the discussion we're having now, through the question and answer function, and then we can try to respond in real time. So let's get started then. I've been speaking enough. The first panelist to speak is Martin. Martin, the impacts of the COVID-19 crisis, as well as the government policy responses, varied quite significantly by country. Can you tell us how SMEs in Switzerland are doing? Is there a strong demand for finance by SMEs in your country? And is this demand being met? What kind of actions has the government been taking to spur the recovery of SMEs, both in relation to the legacies of the pandemic and the new challenges? Please, Martin, you have the floor.
Thank you very much, Miriam. And let me also, as the first speaker, congratulate the OECD to the 10th edition of the scoreboard. Switzerland has been very supportive 10 years ago, or a little bit before actually, in launching this, and we are very happy to see that 10 years after, this is still a very highly useful product and of great benefit. So congratulations to the OECD, and thank you. Thanks to the Secretary General, as well as to Director Lamia Kamal-Chawi for the words. And last but not least, because I will not be able otherwise to thank her, it's Ambassador Adriana Hernandez, chair of the OECD Ambassador Group of Friends of SMEs. We need you, the Friends of SMEs. And so very, very glad that you're happy to speak here and do the closing remarks. So back to the question that you asked. The corona pandemic has hit the Swiss economy for our standards very hard. International comparison in general, we can say it has been hit a little bit relatively less hard than maybe the average. However, specific sectors such as gastronomy, hospitality, events, culture, and other areas has been hit very, very strongly. And all these areas, they have a very high percentage of SMEs. So we can really say this was an SME crisis in particular that has happened around the COVID. We also conducted a survey of around 2,700 SMEs, so that means for our standards that this is representative, and they confirmed that 2/3 of SMEs stated that they were negatively or very negatively affected by the corona crisis. Then the situation of self-financing has changed dramatically. Before the crisis, 62% were self-financed, and that percentage dropped sharply to 37%. So self-financing was not the regular course anymore. They had to rely on additional financing. Almost every second SME, so about 47%, had an increased need for financing, and a third of companies expect that this will also exist in the medium term. Accordingly, the federal COVID-19 loan guarantee program was most important for many SMEs and was heavily used. About 138,000 companies got such a credit within a few days after its launch, and this with a volume of totally 17 billion Swiss francs. Almost about 17 billion euro as we approach parity these days. So actually, the good news is that 5 billion have already been fully repaid, and we estimate that about 8% of SMEs may not be in the position to fully repay the loan. Only about 370 million Swiss francs had to be reimbursed to the banks by the government. So actually, as Lamia has shown before, the very low bankruptcy rate conducted to the situation, or led to the situation that until now, this loan guarantee program has not been very costly, or has been really, really cost efficient for supporting such a large number of the Swiss economy. And at the moment, about 11.7 billion are still outstanding. We did start officially with the reimbursement program just now in March 2020, that companies would start first installments to reimburse, and then the reimbursement is over the next 6 to 8 years. And in hardship cases, this could even go well beyond. So things are pretty well on track. We can say that it has been a very successful loan guarantee program, and as said, until now, we believe also very cost effective. And we are looking forward, of course, now to a certain, we believe, certainly higher level of interest rates. However, this on a moderate level, starting from very, very low levels of interest rate. So at this point in time, this should be doable for SMEs. And however, we all have to see how this Ukraine crisis will continue to develop, and how the impact of higher inflation rate will really, how long will this last, and how deep will this go? Thank you, Miriam.
Thank you, Martin. I took away 2 main points from what you said. I noted that you said that just 8% of SMEs may be in a position where they have difficulty to repay, and also that the Swiss government is already foreseeing programs and measures to help SMEs with their repayments and spread the repayments over time. So thank you very much for those insights.
Yes.
Yes.
Maybe if I can add, of course, if you ask for the next step, in terms of what is the transition out of it, there were several measures also taken to rather improve the framework conditions. We are mostly working on that side, and to drive the openness to foreign trade, to increase, strengthen the workforce, including especially also changes for foreign workers, to optimize the tax system, and also contribute to decarbonization within climate policy. Digitization is a very important part, because we believe that, like digitization of customs procedures, as well as electronic identity, and a further bolstering of all the digital government and e-government procedures that SMEs can easily do, that this will support them in a very tangible way. Thank you.
Thanks, Martin. Yes, I think the digital aspect is something that cuts across many areas, including finance and greening. So thank you for that additional information. Now I'd like to turn to Catherine. Catherine, The British Business Bank recently published its report on small business finance markets for 2020 and 21. And the report highlighted that large numbers of UK SMEs tapped into government-backed finance schemes and support in the wake of the COVID-19 pandemic. Do you see any potential debt-related challenges from the surge in SME borrowing during the pandemic? And what is the bank doing to address these challenges and foster a better balance of financing instruments for SMEs? Please, you have the floor.
Thank you, Miriam, and I'm delighted to be with you today. And I think there are some parallels with what we've seen in the UK with what Martin has just described in Switzerland as well. But just to take a step back, SMEs form the backbone of our economy, and I know that's something that we have in common with many, many other countries in your scoreboard. And SMEs in the UK today make up 99% in number of the 6 million enterprises that we have in the UK. So it was very important right from the very early days of the pandemic that there was a realization that to preserve the productive capacity of the UK economy, we had to do something pretty significant to support our SMEs. And I think looking back over the last couple of years and what's happened in the UK, I think you can say that something pretty significant did happen. Through a series of loan guarantee schemes, we delivered more than 80 billion of guaranteed finance loan instruments to around 1.6 million companies across the UK. So that's roughly 25% of the population, the SME population, that had access to some form of guaranteed loan through our programs. And we estimate that around 600,000 of those SMEs were first-time borrowers. So again, resonating with something that Martin raised earlier, many companies used external finance for the first time, not because it was necessarily a choice, but because it was a necessity because of the conditions brought about by a series of lockdowns. So how are those businesses doing? And we've been trying to investigate, of course, the health of the SME community over the past 18 months or so. And the survey that we conducted in 2021 indicated that actually, interestingly, less than half of the SMEs that took out loans had used all of their facility. So what that says to us, I think, is that many companies were using the loans available, the guaranteed loans available from the government as a security blanket in a way, in the face of really high uncertainty levels, to make sure that they had some cover if the worst case scenarios were to unfold. Also a positive piece of news, which is actually data from the Bank of England, which shows that 32% of SMEs in the UK, so a third of SMEs, have sufficient cash balances to repay their outstanding loan in full, should they be required to. So we also saw actually quite a building up of cash buffers over the crisis. And then thirdly, in terms of a little piece of data, 16% of the businesses that we surveyed were concerned about their ability to repay their loans, which again is, I think, about double the level that perhaps Martin was referring to in Switzerland. But this represented a very sharp decrease from 29% of SMEs that were reporting that in 2020. So the trajectory, the trend is actually a positive one. Having said that, as we've already mentioned today, a word of caution is warranted here. These surveys were conducted before the start of the war in Ukraine. They were conducted before we started to see massive spikes in energy prices and before there was such stronger tailwinds with inflation. So I think we can all see that even though our SME community has been very resilient and has come through into recovery well, there are some pretty strong headwinds that we have to worry about as well.
Thanks, Catherine. Yes, that leads me to a little bit of a follow-up question I had. we take note that things seem to be under control as far as the repercussions of the pandemic and the ability of SMEs to repay, having used the lending in some cases as a security blanket, as you mentioned. But I know it's very early days, but do you have signs as to how SMEs are being impacted by higher energy prices and supply chain disruptions due to the current context? And is the bank implementing or planning to implement any specific support to SMEs to help them tackle these new and rising challenges?
Yes, it's a really good question. And as we know, all survey data has a lag, but we certainly around this table know enough about our SME communities to anticipate what the issues are sort of on the horizon and perhaps not too far down the track. One of the things that we did for our borrowers under the Bounce Back Loan Scheme, which was the largest of the guarantee loan scheme that we launched in 2020, that's provided funding of around 45 billion to 1.5 million SMEs across the UK, is that we introduced pay-as-you-grow options, they're called, to assist borrowers to make repayments. And the main ways we do that is firstly by extending the term of the loan. So the term of the loan was initially envisaged to be 6 years. That can be taken out to 10 years to give SMEs a longer runway to get back on their feet and to make repayments. There's also the possibility of issuing a number of payment holidays so that SMEs can preserve cash now and not use that cash that they'll need in their business to pay down their debt. So those are the significant things that we've done with Bounce Back. The other thing that we still have operating in the UK is the Recovery Loan Scheme, which is still open and available to businesses until the end of June this year. So far, we've provided about 3.5 billion of funding through the Recovery Loan Scheme. So it's smaller than the pandemic scheme, but still significant. And we'll be discussing with government stakeholders as to what, if anything, should follow the Recovery Loan Scheme as and when that comes to an end at the end of June this year. And I think we just have to keep a watching brief on what's happening and think about some other interventions. And my guess would be that perhaps they would be more tailored interventions as opposed to generic interventions going forward. But that's something that I'm sure the Chancellor here is looking very closely into and something that we'll be discussing in the coming weeks and months.
Thanks, Catherine. That's the pay-as-you-grow options seem to be very, very offering a lot of flexibility to businesses to adapt to the changing conditions that they're facing. Thanks very much for that. Now I'd like to turn to Helmut. Helmut, we've been hearing a lot about programs, again, revolving around lending, but SMEs need to have access to diverse sources of financing, as Lamia mentioned, so equity as well as debt, to fit their various financing needs. I'd like to ask you, how would you characterize the latest equity finance developments for SMEs in Europe? And how have your support instruments evolved during and since the pandemic? For example, the scoreboard noted a fragility of early stage finance in particular. Is this something that the EIF and EIB group has been addressing? The floor is yours.
Thank you, Miriam. First of all, let me also, like Martin, congratulate the OECD for this 10th edition of the scoreboard. You know, I'm a supporter of the project and was already part of the working group that kicked it off many years ago. And it's great to see that it has become an established and recognized source of information in the market. To your question, indeed, diversifying SMEs financing sources is very important, and it is an objective of the Capital Markets Union project. And this includes to improve the access to venture capital. And we all know that only a small share of companies use venture capital, but these are typically very innovative, high growth enterprises. Our research shows that venture capital can help the good startups to become great. If you see the promising startup as Popeye, venture capital is the spinach. The COVID crisis hit at a time when the VC ecosystem was on a very good growth path, with more and more market activity, improving returns, and more success stories, often oversimplified, only looked at in the form of a number of unicorns. First activity data from the beginning of the COVID crisis looked as if we would experience an effect similar to the crash scenario of the global financial crisis, which was a real crisis for the VC market, with many players leaving the market, shrinking fund sizes, and severe financing issues for startups. And indeed, in the first COVID shock phase, the number of new investments and also the number of exits dropped drastically. However, after this first shock, the market bounced back and continued to perform well. And in the overall activity data for the pandemic, despite a slight initial dip in fundraising, the pandemic effect is not visible. On the contrary, we see investments in 2020 and in 21 ended on record levels in Europe. Miriam, you mentioned the fragility in the early stage financing, and the data is quite volatile here by year and differs also by source and definition. Overall in Europe and also in the US, on average, over the crisis, even early stage financing had positive growth rates over the recent years, although the rates were lower than in other segments. In terms of sectors, during the pandemic, the healthcare and life science sector benefited as a clear winner of the crisis. Of course, the VC industry shows a pattern towards the use of technology applications to enable greater digitization of businesses. Sustainability, including the transition to greener energy and climate change related investments, is also on the rise, which is very important in the context of the necessary green transition. And overall, our venture VC factor report of last year revealed that the European VC market showed a new level of resilience, which was unseen during previous crises. This is a major achievement, also driven by strong policy support. And we are running regularly surveys on intermediary level and get a quite representative picture of the markets. So we ask, for example, how confident the market participants are for the long-term growth perspectives of European venture. And the value reached recently a record high since the first survey in 2018. We also ask fund managers about the biggest challenges in the European VC business: fundraising, high investee company valuation, and number of high-quality entrepreneurs have consistently been among the most important challenges in the VC business. Our surveys suggest that issues are more severe in the very initial stages, and this confirms your observation regarding the early stage. And respondents especially stress issues in the growth stage segments and the so-called scale-up phases, where we are also still facing structural issues in the market. As regards our own activity, we try to address the identified market weaknesses across all these SME development stages and financing phases. And since the GFC, we have increased our annual commitments from a bit more than just 3 billion in 2008 to 10 billion in 2019. And then the pandemic broke out and market needs for our support skyrocketed. We further increased our activities drastically and reached in last year a support volume of 30.5 billion. And this means catalyzed amounts of around 110 billion euros. Most of it is, of course, related to our debt and guarantee activities, but more than 5 billion euro last year were equity commitments, a significant increase and well spread over the different investment phases with a heavy weight on venture. An important milestone for the near future was the recent signature of the multi-annual program with the European Commission. The Commission, the EIB and the EIF signed the InvestEU agreements, and InvestEU brings together a multitude of EU financial instruments under one roof with a strong thematic focus pursuing green, digital and inclusive transition. And in general, looking forward, our approach is going to have a more thematic orientation in order to contribute to the European public policy goals. And this is an important process that internally we also strongly underpin and inform with our market research. I stop here. Thank you.
Thank you so much, Helmut. I'd like to pick up on 2 points that you made, maybe to ask a short follow-up question. You mentioned that, of course, that VC is really a type of financing that is not used by the majority of SMEs. What do you see as the main challenges? Do you see there is scope to increase the number of small businesses that are using equity instruments? And the second one is that you mentioned that the intermediaries often cite fundraising as one of their top concerns. Do you see scope, or do you see a need for European SMEs to tap into equity markets elsewhere?
Okay. Yeah. Thank you for your question. And indeed, we are still facing issues on the supply and the demand side. On the demand side, there is still often a reluctance by startups to look for external equity. We still have this cultural issue in Europe. In the US, 7.7% of small businesses use external equity. In Europe, it's just 2.5%. And we continue to have issues on the supply side. I mentioned the challenges raised by fund managers in our surveys. For example, fundraising as a big issue. Compared to GDP, venture capital fundraising in Europe is about 4 times smaller than in the US. In 2020, some 5,000 companies received venture funding in Europe, almost half as many than in the US. And Miriam, you mentioned that European SMEs could tap into equity markets elsewhere. From a European perspective, I'd rather turn it around. Many European startups are primarily financed in their scale-up phase by non-European investors. From a policy perspective, this raises concerns like the risk of foreign relocation, brain drain, tech leadership, and sovereignty. And in fact, our research shows that entrepreneurs supported by foreign VC investors are more likely to also experience a foreign exit, and that many VC-backed European startups that exited via M&A were acquired by non-European buyers. On the other hand, of course, cross-border investment flows demonstrate the internationalization and development of the European tech investment landscape. And how much relocation finally happens is also a function of the strength of a domestic VC ecosystem. In a stronger domestic system, local entrepreneurs have fewer reasons to leave, and we need both an enabling and further developing European ecosystem, and we need more European investors with sufficient firepower, including more institutional investors. And we at the EIF are working in this direction. For example, we offer an asset management umbrella fund to enable institutional investors to invest into European venture via us. Another example is a new initiative, and we will be an important pillar of the new project called European Tech Champions Initiative that was recently launched. I stop here. Thank you.
Thanks so much for those additional clarifications and for the perspective that you turned around there on the question of supply. I'd like to now move to Gerhard. Gerhard, as the voice of SMEs in Europe, you conduct an SME barometer exercise, and your most recent results show that SMEs are not recovering as expected, and that uncertainty is rising. And I believe, if I'm not mistaken, that was before the outbreak of the war in Ukraine. Could you tell us what European SMEs see as the main stumbling blocks to recovery? And are there particular regions or sectors that are more affected in the current context? You have the floor, Gerhard.
Thank you, Miriam, and welcome to everyone. Indeed, we have published, I think last week, 2 weeks ago, our latest SME barometer. And compared to the expectations we have seen in autumn for the recovery, we have seen now that these expectations have not been fulfilled. And de facto, what we have seen already before the Ukrainian crisis started, that the recovery on the SME side comes to a halt. And this is for 3 very different reasons. The one reason is that during the autumn, with the new Delta wave and the Omicron mutation, SMEs have been again confronted with a lot of lockdowns and confinement measures, especially in the personal services sector. which didn't fulfill the expectations companies had in August, September last year. And also when we conducted the survey now, it was mainly the data from December and January, where there was still high level of uncertainty how the COVID pandemic continues. And this also spilled up in this uncertainty about the future expectations. At the same time, we have a continuation of supply chain problems, especially in the construction sector, for example, where we see also a flattening of the recovery curve in this sector. And then it can become more and more a problem and overloaded by the fact high energy prices, inflation, etc., etc. So here we have in the manufacturing sector, we have this problem with energy prices, which also turns into some services sectors which are energy intensive, let's say spas, etc. And we have the construction sector on this supply chain problematic. And we have now, of course, an acceleration of all these problems: price, inflation, supply chain, and the breaking away from export markets due to Ukraine crisis, which, of course, will lead to a further reduction of the speed of the recovery of SMEs. On the other side, what we also have seen is, and this is confirmed what has said by Martin and also by Catherine, that compared to a year ago, where we had a lot of worries about how SMEs will do when the crisis measures come to an end, how to deal with the higher debt levels due to the crisis measures, we see that overall in Europe, I would say 85 to 90% of SMEs have no problems to pay back their higher levels of debts. There are still very low figures as regards insolvencies. What also is a consequence out of crisis measures which are still prolonged. We still have here a backload on the insolvency side, which also may lead to some problems in a midterm perspective as regards the structural changes, which doesn't happen, hold back recovery, holds back welfare creation, holds back growth in other sectors. We see it also on the labor market with skill shortages. On the one side, while we have still short-term working programs in other regions and sectors in the same economy, which also doesn't help the recovery. But the main problem, of course, now is to re-establish the supply chains, to re-establish, find new markets for the export, and to compensate companies somehow for unbearable costs, in energy costs. These are the big issues we are facing at the moment.
Thank you very much, Gerhard. So I took note that some of these impacts, especially in terms of energy costs, are very sector specific. And what strategies are your members and SMEs developing to adapt to this new environment? Do you see areas where government should be taking action right now?
Yeah, I think what is urgently needed is to help those companies which are confronted with energy costs which cannot be handled by putting forward to the consumers, etc. Here we have now, since 2 weeks' time, last week, the new temporary framework for state aid, which can also help SMEs not only with access to finance, but also with compensation for energy measures. We are in negotiation with the Commission about support measures as regards establishing new supply chains, creating platforms to find new suppliers, but also helping them to finding new export markets. Some of them are hoping now that with refugees they can solve a part of their skills problems. On the other side, in the construction sector, for example, we see that the companies starting to complain that they have lost employees from the Ukraine who went back to fight in their countries. So in some sectors they have a positive impact from the refugee crisis. In other sectors, we have a negative impact from the war. It's a little bit early to say this is the strategy SMEs are running, because we are still in a phase where we have to find out what are the real consequences in different areas, in different sectors, in different regions of this current crisis. And of course, in addition, nobody knows how long it will take, this crisis, and therefore it makes also it's not easier to reply on it. But however, our long-term perspective is, of course, the pandemic has pushed digitalization, and the Ukraine crisis will push the greening, especially in the energy sector. And here we have to focus the recovery that it goes in this direction to further help to develop and to support the green transition.
Thanks so much for those additional clarifications and for making sure we have the concerns of SMEs themselves very clear in our mind as we continue our discussion today. Now I'd like to turn to Matt. Matt, in the run-up to the pandemic, fintech companies were becoming an ever more central part of the SME financing landscape. There's been a little bit of debate, about how they've played a role during the pandemic and how they've worked with governments. What are the key developments, innovations you have seen in fintech over the past 2 years?
So thank you, Miriam, for inviting me to this panel. Let me first start, as several others have, by congratulations on a great 10 years of the Scoreboard. I was there 10 years ago with then Princess Maxima launching this, and it's really great to see what it's become. I hope that 10 years from now, we are looking at a scoreboard that covers several times as many countries as it now covers. And I also hope, and please don't take this the wrong way, that when we're talking in March of year X about what the scoreboard has learned, we're talking about data from year X-1 and not year X-2, because as we see in this particular time, that gives us a lot of wishes that we wish we could have. To the other, and that's my segue into fintech, because fintech is already giving us that possibility. And as if people didn't realize how important fintech was going to be in SME finance, the crisis has shown this very, very clearly. Let me just give one example. We haven't talked about the US. I happen to be joining you from Washington, where dawn is breaking right now. And the US initiated something called the Paycheck Protection Program during the COVID crisis to help firms sustain employment. And the #1 bank that has implemented paycheck protection with the government is JP Morgan Chase. And maybe that shouldn't surprise us, because it's a very, very large bank and it has branches all over the United States. But the #2 company for volume in the Paycheck Protection Program is a company, one of our members, called Cabbage, now part of American Express. And that Cabbage is not a bank. Cabbage is a fintech that is specialized in lending to the smaller of the small business sector. And not only was their volume second only to JP Morgan Chase, but their average loan size was about a 5th or a 6th of that of the bigger bank. And I don't want to go into some of the controversies in the US about some of the big banks lending to people like American Airlines and Hilton Hotels in the name of small business job support, but that was not the case in the fintechs. And it's also, at the same time, there are many fintechs that you won't have heard of, but they were equally critical in that program, helping some of the smaller banks to be part of this program, and helping the US Treasury and the Small Business Administration, which were not known as the most digitally advanced parts of the US government. I may get myself in trouble here. I'm not a US government representative. I work for the IFC, but both government and financial institutions were immensely helped, and not just in the US. And we've even had some cross-border help. Let me put a shout out to the UK, because Oak North Bank, one of the interesting SME, more digitally oriented banks, worked with some regional and community banks in the US, helping share its technological solutions for lending as a solution, as a service, to help those banks be in the Paycheck Protection Program. And those innovations are going to outlive that program. They are making a whole new way of approaching small business, more digitally processed, turning what in all countries of the world has been a generally unpleasant and unsatisfactory user experience of SMEs dealing with financial institutions, and turning it into a much quicker and more, hopefully more positive experience. And what the key thing that we are seeing that fintechs are doing in the SME financing space is they are showing how data can be used much more effectively than it's been used. And look, nothing has fundamentally changed about the mechanics of credit and the mechanics of risk assessment, but what was the case is that the transactional data that has usually been the preserve of banks, because they have customers and they see their customers, how they deposit, how they withdraw. And that has always been the most valuable data to understand what risk is. But oddly enough, the banks that possess that data weren't using it very aggressively. And fintechs have come in and shown that if you can get access to that data, you can really look to enterprises. And here's another dimension. And again, it's not just true in the US, it's true in many parts of the world, that if you look at the lending to groups that have been, how could I put this, historically hard to serve, women entrepreneurs, young entrepreneurs, startup businesses, rural entrepreneurs and agri-entrepreneurs, you are seeing fintechs take much bigger slices of those pies as they are moving forward, because they're able to see how you can use that data. So I think we have already, even before COVID, we were seeing this, but COVID has really highlighted the importance of this, and it's accelerated not only what fintechs are doing, but it's accelerating what bank fintech partnerships and government fintech partnerships are able to do. And I think as we go forward, we're going to see an additional trend here, which is not only taking that data and making it available real time to do a better job of assessing risk and making financing decisions. We're seeing data being used to go beyond finance to help those SMEs in two other critical areas that SMEs have always needed help, and they rarely could get it efficiently and effectively. One is in helping manage the finances of the SME itself better. And the same data that's helping financiers make risk management decisions is now able to be packaged in software as a service to enable SMEs to have dashboards too. And not just the big companies that could afford SAP or Oracle or things like that. And even SAP and Oracle can now sell to SMEs, at least the bigger ones. And the second thing that SMEs have not had is the support to help manage their own market relationships, who they buy from, who they sell to. And we're seeing new platforms develop that are offering these services so that SMEs can find more market opportunity, they can get supplies more effectively, in a more timely manner, in a more cost-effective manner. And most importantly, we still have a lot of progress to make here, but we're structuring these supply chains so that they're more transparent, and hopefully that will lead to faster payment to SMEs. Because one of the biggest obstacles to SME growing, and I know that in Europe, there's always been concern about this, at least as long as I've worked in Europe, that how you can get more timely payments so that you can unblock worldwide trillions of dollars that's currently now being held up that could be used to make SMEs more financially efficient, and that will help them to grow. So there are a number of other things we could talk about, but those I think are the key elements we are seeing now. Of course, we're going to have some periods of adjustment as we move from relief to recovery. But again, I think fintechs are going to play a prominent role in keeping us on top of the information so that whether as governments or as financiers, we will be making more timely decisions, because those that can make more timely decisions are going to be the ones that work through this better and are more supportive for SMEs.
Thanks, Matt. Well, let me start by saying that we share your hopes and dreams for the scoreboard in the coming years, and we're we are working on all the issues that you mentioned. Thanks for sharing this, shedding light on really the role of fintechs, not only in helping SMEs access finance, including underserved SMEs, but also in providing non-financial support and tools for SMEs to better manage their operations and their supplier relationships. Just very quick follow-up question. Do you see a role for the fintechs in helping SMEs achieve a more balanced mix of funding between debt and equity?
Absolutely. One of the easiest things that we're already seeing is in an area that's generally called merchant payments. And we are seeing that if you can digitalize the payment and transactional relationship, you can suddenly inject a lot more flexibility into the financial relationship. So instead of saying, I'm giving you a loan and every month you have to pay me this, and if we're going to have to change that, we have to do a formal adjustment. No, you're seeing a lot of offers now where I'm going to make you I'm going to give you finance, but instead of you pay me back at a fixed amount, I'm going to be in the payment relationship with you, and I'm going to share your revenue coming in at a certain guaranteed rate. And if you have more business, you might pay me back faster. If you have less business, you might take longer. But I'm going to go with the ups and downs of the business, something that asset-based financiers have done for quite a long time, but in a very small way. And that's effectively going to quasi-equity. And it's also going, by the way, of interest to an increasing number of OECD countries, to Sharia compliant systems, because you're then technically saying you are taking a shared risk on the asset as opposed to extending an interest relationship, which of course is haram in an Islamic system. The second thing that is happening is that fintech, the digital technologies, are enabling angel investors who we haven't talked about much. And this, I mean, we've been a bit quiet about them during COVID, but they're much more important for more SMEs than VCs. And they always will be. But the limitation has been that they're individuals. And therefore, it's kind of, how do you grow them? How do you make it go bigger? Well, I think fintech is going to start. We're already seeing, we were seeing before COVID, we're able to see how you can link angel investors and find ways to develop quasi-institutional ways of bringing capital to do risk-based in investing. And that's, and with the DeFi movement, we're going to see that extended even farther. And I think that in the next 10 years, we're going to see an explosion in that sort of area. And it's going to change the face of how SMEs can balance debt and equity in their financial future.
Thanks. Thank you, Matt. Well, we now are going to turn to the second part of the discussion. We are running out of time, but it's an important part of the discussion. We've talked so far about the challenges of debt or lack of challenges, debt, the balance between debt and other types of financing instruments. Another key finding of the scoreboard relates to the huge challenges SMEs face in the green transition. And not least of those is the need to finance green investments. And here, our analysis shows that recovery packages appear to fall short in these areas for SMEs. Yet we know it's a key priority for both public and private actors in order to achieve the goals of the Paris Agreement. SMEs will obviously need to be a central part of our collective journey to net zero as both adopters and developers of solutions to the climate crisis. So now I'd like to ask each of you a question. If you could keep your response to 1 minute, if possible, that will allow us to stay on track for time. We'll see what we can do. Helmut, you mentioned that accelerating SMEs' green transition is an important priority for the EIF and for the EU more broadly, and you have stepped up your research on this topic in recent years. What are the key challenges that EU financial institutions face in integrating ESG considerations into SME financing, ESG being environmental, social, and governance?
Thank you. And indeed, despite the tragedy of the new geopolitical turbulences driven by the Russian war against the Ukraine, and despite the still ongoing COVID crisis, the climate crisis, is going to be the world's overarching topic. And decades have been lost, and this decade is critical to address the issues. And this has significant impact on the financing of companies, and the financing of companies can have a significant role in the fight against the crisis. The EIB group is turning itself into the EU Climate Bank, and the EU Climate Bank roadmap has recently been published. And as a consequence, also we as the EIF, as an important pillar of the group, put even stronger emphasis on the climate and green topics in all types of actions, not only in specific programs. And in general, soon it will be best market practice to consider ESG factors in each and every investment decision. And banks will be obliged to use them in their approval process. We also see from our equity surveys that ESG considerations are increasingly relevant for the fund managers in their due diligence process. As specific issues, there is a lack of data, definitions, and standardization. Of course, historically, there haven't been consistent mechanisms in place to
Helmut, we're not hearing you. He seems to be frozen. We may have a connection difficulty. Okay. In that case, maybe we will move on and hopefully go back to Helmut when he is able to connect again. Then I would turn to Gerhard. To what extent are European SMEs already engaged in steps for the green transition? And I'd like to hear from you. Do you think that awareness is currently a greater challenge than finance to the greening of SMEs, or would you say they're on par? How would you assess these different
ESG? However, we are now in a new reality. It is important to stress that the taxonomy debate is about more than semantics, as it will define to an important extent where public funding will flow to in the future. So I stop here as I need to be short.
Helmut, thank you. We did have some difficulties hearing part of what you were saying towards the end, but then we heard your conclusion. So thanks so much. I already turned to Gerhard with the question that I asked you about the challenges SMEs see in the green transition, and how you assess awareness as a challenge versus the funding aspect.
I would not say that there is an awareness problem. So SMEs are very much aware that the green transition has to happen. The problem is rather that they, many of them don't know how to start it, how to get the financing, how to get the skills to do this. And therefore, I think that one element that is very important for us is that for example, in industrial policy, we have to make clear that we need more regulatory clarity. If an SME starts to investing in their green future, they have to know now what are the rules and what's the game in the next 10 years. Otherwise, they are hesitating to invest if they don't know if the machine they're buying now can be used in 5 years, etc., etc. So this regulatory clarity is a very important point. This goes on regulation. This is about standard setting, etc., etc. And this is a big challenge for us. And at European level, we have to make progress here. And the second thing is as regards financing. Helmut rightly pointed to the situation that banks have to include now in the risk assessment of an SME, when they lend to an SME, also sustainability aspects. And I think in this process, in this dialogue between banks and SMEs, they also can help a lot the SMEs to get more clarity about their strategy, how they want to reduce their climate impact, how to improve their production processes, etc., etc. So here we have to be clear that to use these possibilities without overburden this relationship with formal reporting, with a lot of bureaucratic burden, which may come up, especially from the whole taxonomy discussion, from the whole sustainable reporting directive discussion, etc., etc. Because the content is important, but please let's together try to avoid unnecessary burdens, which doesn't help neither the SME nor the environment.
Thanks. We take your point, especially about the question of awareness is not maybe the right way of putting it. It's more about having operational steps and understanding what needs to be done in an environment that's going to be predictable for those businesses over time. Catherine, let me turn to you. The British Business Bank has obviously placed sustainable finance at the heart of its mission. Now you are also a founding member of the OECD platform on financing SMEs for sustainability. What are the main channels through which you are seeking to support SMEs' journey to net zero?
Thank you, Miriam, and I'll try to be brief. And I think Gerhard actually brought up a number of the issues that we would recognise as well. But where we start is obviously the UK's commitment to achieve net zero by 2050 is enshrined in law, and we want to do everything in our power that we can to help the country meet the challenge. And if we look at our 6 million SMEs in the UK, they account for roughly 50% of all business emissions. So Lamia tells us, and we all know it, there's no transition without our SMEs. What can we do about it? I think we have 3 levers at the British Business Bank. Firstly, access to finance, or improving access to finance, is what we do. And we ran a survey last year to try and work out where SMEs are on their journey to achieving a net zero transition. And 11% of the companies surveyed have already used external finance to support the implementation of a greener business model, and a further 22% would consider doing so. So I think that gives us a good base of businesses to work with and to outreach to help them find the finance they need to help them on their way. The second thing, and Gerhard has touched on this so very briefly, the awareness is there. It's really, how do you go about doing it? So I think there's a big role that we could play in terms of information provision, sharing of best practice, sharing of case studies, which really highlight how many SMEs have already started on this journey or been successful on that journey. We know there are barriers. 35% of SMEs in the survey said costs were a major barrier. 32% cited feasibility, meaning that there's a sort of powerlessness. What can I actually do to move the needle here? But I think there are very good case studies that can be shared across the SME community to highlight what just is possible. And the third lever we have, I think, is through our equity programs. And again, we talked a little bit earlier in the panel about the role of venture capital. To date, we've invested around 250 million in broadly in green tech categories. What we're looking at is whether we should be setting a soft target to drive more investment into green technology. I think it will happen naturally because I think many VCs see this as the opportunity of this decade, and it's an imperative as well as an investment opportunity. But I think we should be working on ways to push harder behind that agenda so that what we're doing isn't part of a specific program. It's something that's built into everything that we do going forward.
Thank you, Catherine. Matt, how do you see the role of Fintechs in supporting the SME green transition? Can they bring something additional to the table?
I think Fintechs can be very, very important in being the bridge that's going to connect the Internet of Things with the Internet of Finance. And that is going to open up a lot of possibilities. I'll just give you a quick example. In the global supply chains, a very important industry is the garment and clothing industry. And it's also a critical area where we know there are environment and there are social issues in the supply chain. And historically, it's been very difficult to get SMEs to do something about that because, and here's where, as we get to poorer countries and as we get to smaller businesses, there is not awareness of what can be done, and there's not incentive to do much because you're pushed by your buyers to be faster and faster, higher and higher quality, but the price point stays fixed. So we've been able, with partnerships with digital supply chain platform people and other technologists in the physical part of the technology space, to make faster and cheaper financing available to SMEs in those sectors who submit to audits and take on improvements and then get a better score on their audits. And I'm talking about an IFC example here with the likes of Nike, Reebok, and Levi's. And I don't want to overstate, this is just a fraction of what's going on but that's where we have to move. And we have to combine what fintech is enabling us to do technologically with what the public sector, whether it's governments, whether it's development banks, whether it's both, we have to work hard to create the incentive structure, because right now the SMEs are being asked to shoulder a lot of burden with less knowledge and less financial capability. And that's just not going to work. It's great that OECD is working in this area, because we will need to be highlighting these issues more.
Thanks, Matt. I'm conscious of the time. I'd like to ask if people can hold on for just another 10 minutes. We're arriving at the end. I'd like to just say a few words before handing over to Martin, and then to conclude, then we will conclude with Ambassador Mejia. I think it's just a good moment to stop and just take stock very quickly of what we've heard today, and whether we've answered the question, is the debt burden holding back SME recovery? What we heard was that, yes, indeed, many SMEs took on external finance during the pandemic. Many of them were new borrowers. So clearly, there has been an increase in SME debt over the past 2 years. There's also been an increase in other types of financing. We heard about the resilience of the VC sector during the pandemic, which is something that gives us a bit of hope going forward about the diversification of financing instruments and the resilience of different instruments. Is the debt holding back the recovery? Well, for now, from what I've heard from the panelists, we understand that thanks to the support of the different institutions of the governments in providing a degree of flexibility on repayment terms and other programs that they're putting into place as time goes on. For the moment, there are not super strong indications that is holding back the recovery. Obviously, we need to pay very close attention to what's happening around us and what will happen for SMEs in the coming months, and see, the uncertainty about the war and how that's going to play out, and posing new challenges to SMEs. Because what I heard was that actually the financing aspect it's there, but there are a range of new challenges that are hitting SMEs right now in relation to energy prices, inflation, disruption in supply chains, and governments and financial institutions are paying careful attention to this. We also heard that the promise of fintech in addressing many of the issues we talked about today. But now I'd like to turn to Martin as chair of the OECD Committee on SMEs and Entrepreneurship, and ask you how the committee is responding to these emerging needs of governments and SMEs in the areas that we've discussed this morning. Martin.
Well, thank you very much. And thank you also for the summary. I totally agree with it. Of course, we always have to make a differentiation between that's the overall view, the overall economic view. It doesn't need to reflect each industry and each subsector equally, but we have to have this macro view, and I think the summary gives a very good view on the macro situation. The Committee on SMEs and Entrepreneurship, let me give a few points here, what we are doing, where we are working. Of course, first and foremost, I think one of the main jobs is the evidence-based creation and continuation to develop for sound, responsive, and flexible policy making, to monitor the trend, get the data about policy developments, and report about it. This is very unique. We have to always remember, of course, in this circle here, this is very, very well known and well established. However, this is really the place in the world for SME data that is our, of course, main job. Then, based on this, first, we have our flagship production, the Scoreboard on Financing SMEs, as we launch it today. And we're now launching a pilot in cooperation with the European Commission to begin collecting data at the sub-national level. And this will help gain us a better understanding of SME financing needs across the regions in order to provide more differentiated policy responses. And we're also launching another pilot on gender disaggregated data. So you see, as I said before, we have a macro view that is always necessary. However, then it is also necessary to disaggregate that macro view, be it on an industry level, be it subnational geographically, be it by gender. Then second, a new update on the G20 OECD high-level principles on SME financing, which were first developed in 2015, and the update will take account of key developments in the landscape for SME finance, including guidance in response to developments in fintech, as we have discussed today, the need for strengthening the resilience of SME finance in times of crisis, and not least on how to enhance SME access to sustainable finance for the green transition, all these topics that we just discussed in this fora here. And on this last point, we're also expanding dialogue and knowledge sharing through the new OECD platform on financing SMEs for sustainability. This initiative brings together public and private financial institutions, policymakers, and SME representatives to identify operational, financial, and non-financial support to accompany SMEs on their journey to net zero. We are very pleased to have the British Business Bank, the Business Development Bank of Canada, and the Industrial Bank of Korea as founding members. We encourage all of you to get involved. This green financing definitely is something here to stay. It's a topic that is not going to be short term, but really we will have to do a lot of work on that side for the next probably decennia, I would rather say. Finally, we are developing an overarching OECD strategy for SMEs and entrepreneurship, including guiding principle for SME and entrepreneurship policy. Here we look at the whole holistic SME policy perspective, including a wide range of topics. This will bring together crucial building blocks for a cross-country, cross-cutting approach to SME and entrepreneurship policy, not least of which is access to finance, of course. And the guiding principles will be delivered later this spring, and operational tools to support countries to implement them will be rolled out in the coming months. I'm looking very much forward to this OECD strategy for SMEs and entrepreneurship policies to support governments, and to see also where do we have blind spots, where are we well positioned, and what are the guiding orientations to set up new policies or sharpen existing ones. And to conclude, let me stress that the exchanges like this one is really, really great. This helps us a lot. This provides a lot of input for the committee, and particularly at this moment when we are defining our work program for the next 2 years within the committee, these kind of feedback from your side is highly, highly welcome, and we can take that into account. And then also at the next meeting that will be held soon, hopefully back in Paris, at least part of us will be ready to travel again. Not all of us will make it. However, it's a good restart after the COVID crisis, also to see each other, or some of them, physically again. And thank you very much for this exchange from my side. I enjoyed it a lot.
Thank you so much, Martin. Now it's my pleasure and honor to welcome Ambassador Adriana Hernandez, who is the permanent representative of Colombia to the OECD and the chair of the OECD Ambassadors Group of Friends for SMEs. Previously, she served as Vice Minister for Multilateral Affairs of the Ministry of Foreign Affairs of Colombia and as Vice Minister of Culture. The ambassador has experience in a number of multilateral organizations as well as the private sector. Ambassador, we are very pleased to welcome you for these closing remarks. You have the floor.
Thank you very much, Martin and Lamia and Mariam for the invitation. It is a real pleasure to be here today to close this event. Today's presentations and discussions were excellent. They help us to shine a light into the issues facing SMEs and governments now and in the near future. This is clearly a topic of great relevance and interest to us all. Our SMEs and entrepreneurs play a critical role in our economies and our communities. They must continue to be at the heart of our priorities as we seek to recover from the pandemic and face new economic challenges and disruptions stemming from the war created by Russia in Ukraine. I am pleased to say that the OECD is doing just that. Just last year, the OECD created a new committee on SMEs and entrepreneurship to lead its work building the evidence base and providing policy advice, guidance, and recommendations to governments. Today's launch of the OECD's Financing SMEs and Entrepreneurs Scoreboard is another important step in that journey, helping governments to put in place the right policies to support SMEs through the recovery and beyond. I would like to highlight 2 points from the report. First, I welcome the report's invitation for governments to foster diversification of SME finance instruments, particularly fintech. This is in line with the update of the G20 OECD high-level principles on SME financing, which will be discussed at the upcoming committee session. Second, the report mentions that some countries might need to take additional steps to address the challenges of SME recovery. I invite CFE to closely follow the work being done by ECHO to update the OECD insolvency indicator. Now, I want to highlight that OECD ambassadors are following this line of work very closely through the informal group of friends of SMEs that I have the honor of chairing. Our group of friends is proud to champion this work and spread its very relevant initiatives. This group welcomes SMEs to talk about their experience, to raise awareness about the challenges they face, and to ensure that our approach and policy discussion focuses on fixing tangible, real-world problems. I am very much looking forward to the next steps as we take the work on SMEs and entrepreneurship, including the financing scoreboard, to the next level. Thank you again for the participation today, and thank you again for this invitation.
Thank you so much, Ambassador, for those very encouraging words. And thank you for your leadership in chairing the group of friends and being our ambassador on these issues more specifically. Now it's time to conclude. I would like to thank everyone again for your participation today. Our audience, unfortunately, we didn't have time to get into a live exchange, but I hope this is just the beginning or a continuation of the dialogue that we will take forward in the coming weeks. I'd like to extend a really heartfelt thanks to our guests today, our speakers, Lamia, Catherine, Matt, Martin, Helmut, Gerhard. Thank you so much for being with us today and for sharing your insights. And I'd like to also take this opportunity to thank all of those who were involved in the production of the scoreboard, the authors, our communications team, it really was a team effort, and it's always a pleasure to work with all of you. So with that, I would conclude the meeting and looking forward to continuing the dialogue as we move forward together on these issues of importance for SMEs and entrepreneurs. Thank you so much.
Thank you. Goodbye.
Bye-bye. Thank you.